Hey guys, welcome back. So today we're going to talk about the pros and cons of doing mortgage forbearance. We're also going to address one of the questions I received from a viewer over the weekend asking me whether or not they should use savings to pay for their mortgage instead of doing forbearance. Before we get into that, I want to thank you for taking the time to watch. My name is Jeb Smith. I'm a real estate broker here in Southern California, and my channel is all about real estate, all about finance, trending topics, and how they affect each other. So if that's of interest to you, do me a favor, hit that subscribe button and give me a thumbs up if you like the content. So as I mentioned, we're going to talk about the pros and cons of doing mortgage forbearance. So what is mortgage forbearance? We've talked about it a million times, but to reiterate, mortgage forbearance is basically when the bank, the servicer that you make your payment to, allows you to more or less skip payments and pay them back at a later time, whether it's in 3 months, 6 months, at the end of your loan, whatever it is, they are allowing you to miss payments. It's an agreement that you've agreed to with that servicer or lender and pay them back at some point in the future. The pros would be, in the time that we're going through right now, people have job loss, people have been furloughed, people have, positions where they have bills, but they don't have income coming in. So one of the pros of forbearance is being able to, pay that at a later time, especially if you don't have the income coming in or the savings in your bank account to continue to make those payments. That's a huge benefit and probably really the only pro to doing mortgage forbearance, right? Is it gives you the ability to continue having a house, living in your house, without having the burden or the stress of having to come up with that payment at this time. But keep in mind, as I mentioned before, this isn't something that's going to go away, right? You're going to have to pay that payment in the future. It just gives you relief now that you're not going to have to come up with that payment. Now, on the con side, one of the cons of doing mortgage forbearance is that you are going to have to pay it in the future, right? It's not going to go away like anything, whether it's added on to the balance of your loan or there's some sort of payment plan restructured with your servicer, with your lender. At some point, you're going to have to pay that payment back. But the bigger con, and this is where most people are going to be affected, is that there's probably going to be some underlying credit issues, right? Now, the CARES Act did say that the servicers, the lenders, aren't to report anything negative to the actual to Experian, Equifax, TransUnion, the actual companies that do the credit reporting. While they're not going to report anything negative, chances are it's still going to affect your credit, right? Because they are still going to let the servicer know, or I'm really getting mixed up here. They're really going to let the credit reporting agencies know that you're in forbearance, right? So there's going to be a note on your credit that says that you're in forbearance. Either that, or in some cases, the servicer, the lender, is not reporting any data to the credit agencies at all. And those credit agencies look at that as a negative, right? I've had many of you guys reach out and say, hey, look, my credit score has actually dropped. It's dropped 14 points, it's dropped 40 points. And those are both actual scenarios that you guys have reached out to me. So people are monitoring your credit. The credit agencies have come out now and said you can check your credit report at least once per week for free. So there's a lot of people taking advantage of that, whether it's through Credit Karma or one of those other websites where you go directly to the credit agencies themselves. But people are monitoring their credit and they're seeing changes in their credit when nothing else is changing. And so people are having negative effects on your credit. And so that is one of the cons. In addition to that, if you go into forbearance, you're going to have issues with refinancing. You're going to have issues with purchasing a property, at least for a period of time. Right now, we don't know how long it's going to affect because lenders haven't came out with updated guidelines to say exactly what they're going to be looking for going forward. But in past case scenarios, lenders have not allowed somebody to refinance if they're in forbearance. And so if you're currently in forbearance, whether it's you plan to pay it at the end of your loan or over payments, the fact is you're still in forbearance until those past payments have been made, right? So if you plan to add it to the end of your loan, you're still in forbearance. So chances are your credit report is still going to say that until those past payments have been made, and your lender is not going to allow you to refinance if that's the case. Same thing with purchasing a home. If you're in forbearance, you're not going to be able to you're probably not going to be able to purchase a new home without that forbearance being removed from your credit report, which means that you've got to come up with those past due payments in order to do so. Now, once those past due payments have been made and the forbearance is removed from your credit, do the lenders then allow you to purchase a home? Unfortunately, we don't know that, right? That's part of the unknown with the equation at the moment, is these lenders haven't updated their guidelines to reflect what actually happens at the end. So those are really the big cons, is that you're going to have some sort of credit issues. You know, it's going to affect your credit one way or the other. It's going to have an impact, right? Whether it impacts you in the ability to refinance or purchase a home, or it affects you because it drops your credit score. There's going to be negative side effects. So that brings me to the second part of this video, which is where I mentioned somebody reached out to me and said, hey, you know, I actually have savings. Should I use that versus going into mortgage forbearance? And I'm going to be transparent here and say, you know, I'll tell you exactly what I did. Now, this isn't a recommendation for you to do the same, but, you know, I'm in a position, I'm a self-employed real estate agent, right? My business went through not a downturn, but it definitely affected my business at the beginning, where I had deals that were in escrow, fall out of escrow, and a delay in people wanting to proceed forward. Now, that's since changed, but where I'm getting at is, you know, my income changed for about 4 to 5 weeks of that, where, you know, I had bills that needed to be paid, my mortgage, my car payments, that sort of thing, and I didn't have income coming in. And so you know, the question was, do you use your savings? And in my case, I did, right? Instead of taking the mortgage forbearance, I actually started using savings to pay those bills. Now, you know, in my eyes, that's what savings are for, right? Savings aren't, you know, they're for a rainy day when you have issues that come up and things need to be paid, whether it's an issue with your house or an issue with your income. Savings are there for a reason, and I used those savings to continue to pay my bills versus going into forbearance. And the reason I did that is because, you know, my interest rate right now on my house is around 4%. Right? I'm expecting rates to go lower. I don't want to hinder my position to refinance in the future because I have a forbearance on my credit report. Now, not making payments would have been great, right? I would have saved X amount per month and been fantastic that I would have kept that money in the bank. But at the end of the day, if it keeps me from being able to refinance in the future or purchase a home or whatever it is that I may need, you know, because I'm using my credit, then you know, that's what you got to think of, right? And in my case, I didn't want to have those concerns, so I continued to pay bills with my savings. So I would tell you, if you have savings, you know, use them to stay current if you need credit for any reason. Now, if you don't need credit, if you own your cars, you don't plan to buy a house, you don't plan to use anything with regards to your credit, then sure, go to mortgage forbearance, but just know that it could and likely will affect your credit in some way. And so that's really the downside of doing forbearance. And if you don't want those and you have savings, then use the savings, you know, to allow your payments to be made, not affect your credit, and move on. Yeah, it's cash. You can make it up at some point in the future. But to me, the credit was more important, at least for the time being, in case, you know, maybe you need to get credit cards, maybe you need to get something that will, you know, maybe help your business, or you just don't want bad credit. So anyway, that's my opinion. So I would tell you definitely to use that. But if you're in a position where you've had a loss of income, you don't have savings, or you have very minimal savings, and you know, then yeah, maybe mortgage forbearance is the better option. But it's hard for me to recommend anybody do that unless they absolutely need it. And so that's the reason for that. So I hope that's helpful. You know, again, I've talked about a lot of this stuff over and over again. I just want to reiterate it because a lot of you guys are reaching out to me asking these questions, and I'll continue to do so. I'll continue to address your questions. So if you have them, put them in the comments below. And as a lot of you are reaching out to me, if you have questions directly, reach out to me. I'm happy to take your calls, happy to walk you through scenarios, and tell you what I would do in your situation, and or give you friendly advice and guide you in the right direction. So as always, I do appreciate you taking the time to watch. If there's something on this topic that you want me to touch on, again, feel free to reach out to me. As always, thanks for taking that time to watch. We'll see you again soon. Have an awesome day. Bye-bye.